In this video, we are going to walk through how to write the accounting equation in financial accounting. We have some business terms to start with. Assets are what is owned. Liabilities are what is owed. Now, the difference between assets and liabilities is called equity for a corporation. Equity is also known as stockholders' equity or shareholders' equity. In a sole proprietorship, equity would be listed as capital or owner's equity. The accounting equation for a business is assets equal liabilities plus equity. We can rearrange that equation a few different ways, including the following. Assets minus liabilities equal equity, or assets minus equity equals liabilities. If you know two of the terms, you can solve for the third. The balance sheet is a financial statement that reflects the accounting equation. Here is an example of a balance sheet. The accounting equation is assets equals liabilities plus equity. We see that assets are on the balance sheet, liabilities are here, and equity is also on the balance sheet. When we put the assets, liabilities, and equity together, we have the company's accounting equation of $16,900 equals $8,800 plus $8,100. Let's go through another example of applying the accounting equation. Our example set of facts will be that a business has $20,000 in assets, owes $8,000, and has equity of $12,000. The accounting equation is assets equal liabilities plus equity. We put the numbers into that equation and arrive at $20,000 equals $8,000 plus $12,000 for this company. That's it. That's the accounting equation. We are done now. This video was created and narrated by Dr. Wendy Tietz and is part of the Accounting Skill Builder video series. See accountingisanalytics.com for additional faculty and student resources.